Good afternoon. This is Market View. Thank you for tuning in. This is the final episode this week. My name is Lungelele Makakula. Do watch us on our YouTube page, Eswatini TV. As a growing demand for payment solutions and affordable financial products took off worldwide, the Central Bank of Eswatini launched the FinTech Regulatory Sandbox in March 2019. This launch was a fulfillment of the bank's mandate of creating a conducive environment for the development and adoption of financial technologies with the hope of improving access, efficiency and affordability of financial services in the country. With CBE's understanding of the growing importance of keeping up with and embracing emerging technologies, the sandbox did not only prove to be a success but also motivated more startups in the country to submit and test the market. Today we'll be joined by Delta Pay to share their experience with the sandbox. They will take us inside their journey, highlighting how this innovative platform by the Central Bank of Eswatini has helped them develop, grow and bring safe, cutting-edge financial solutions to market. For now, let's go to our first story. In a move set to bring relief to consumers, the Central Bank of Eswatini has revised its 2026 inflation outlook down to 4.05% from a previous 4.58%. The cut reflects growing confidence in price stability and signals a positive turn for the nation's economic trajectory.
The Central Bank of Eswatini has revised the inflation forecast for the year 2026 to 4.05% from 4.58%, while the forecast for 2027 is revised down to 3.92% from 4.34%. The central bank states that domestically, the downward review of the multi-year electricity tariffs is the one expected to exert downward pressure on the overall inflation. For the month of April this year, inflation was recorded at 3.3%, significantly lower than the bank's initial forecast. The bank's forecast for the short term have been markedly revised downwards on account of sustained moderation in food, housing and utilities components of the consumer basket, which account for a combined weight of 47.8%. The central bank says externally the slowdown in oil prices is expected to continue in the short to medium term, mainly driven by an anticipated increase in supply and the negative impact of the U.S. tariffs on global growth amid a muted demand outlook. While factors supporting a moderation in headline inflation have proven potent, inflationary pressures still obtain, mainly coming from a relatively weaker exchange rate. The Rand-Lilangeni exchange rate has been under stress, mainly due to unfavorable policy developments in South Africa and pressure coming from 30% tariff on all South African exports to the U.S. Consequently, the Rand-Lilangeni fell to a low 18.91 cents to the US dollar in April this year, much lower than the 18.50 cents recorded at the time of the previous meeting. Development in core inflation, excluding volatile items such as food, auto fuel and energy, have seen it move in tandem with headline inflation, albeit a lower rate. The outcome for the month of April this year came out marginally lower at 3.4% than the bank's forecast of 3.6%. Moderation in services and food inflation, key indicators of the movements in core inflation, have situated the outlook towards the downside in the short term, according to the Central Bank of Eswatini. Reporting, Nelson Langamandla, Vuminkosi Nzinisa and Derek Msibi, Mbabane.
Countries under the International Labour Organization are currently working on a groundbreaking convention to regulate the growing platform economy, and it's all happening at the Geneva conference. Once this global agreement comes into force, Eswatini will be required to ratify it. Speaking just after a key meeting on the matter, Business Eswatini's Chief Executive Officer Inati Dlamini confirmed that the Eswatini delegation is actively contributing to the discussions. He emphasized that this initiative could be a game changer for the country's economic growth, marking a new chapter in the digital economy landscape.
One of the issues that we're having to deal with is what you call the platform economy. And you may ask, what is it that we're talking about? The platform economy is a highly integrated digital platform through which we do e-commerce, through which transactions are made, connections are made. And we have seen in the recent times that this emerging sector of commerce is really taking ground, and we need to position ourselves as countries of the world to say, how do we position ourselves to respond to this sector? How do we control the sector? And also to identify who is involved here. Some people now may ask, what is exactly that we're talking about? Some people will say it's e-commerce. So e-commerce is part of it, but it's more than that. It's where suppliers and buyers meet each other on digital platforms. They transact, they do business, they do settlements across the globe. And governments, and indeed the private sector, is to ask ourselves, who are these people, where they are, how accountable are they, how protected are they, what laws do they have in countries that seek to protect these people? Is there any social justice in those platforms? Are there any social protections on those platforms? We will also have seen the increasing rise in what you call the gig economy, where people take short-term jobs, they deliver, they get paid. For instance, those money that they text, how are they settled? Are banks involved in these transactions? We are having to litigate those issues with the aim of coming up with what you call an ILO or Geneva Convention. We are having to also contribute our views on how we can structure this convention. Hopefully, by the end of the conference, we'll come up with a convention. Remember this, and it's very, very important. Everything we agree upon here will end up becoming a convention, and the convention ends up becoming a law at all.
All right, and that's it for our business news this afternoon. Thank you for staying with us. After the break, we're joined by Enolwazi from Delta Pay.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.za.
When you choose your adventures, you do so with an open heart and a desire for the unexpected. You embark on journeys to discover new worlds full of wonder. You choose a path to awaken your senses, a world to make you look up and realize just how inspiring this life can be. Arrive and awaken your heart. Explore life in ways only thought possible in your dreams. Discover just how far you go to expand your understanding of life's greatest mysteries. There's just one place on this planet with so much to offer. Now is the time for you to have the royal experience.
Welcome back. Today we're joined by Delta Pay to share their experience with the Central Bank of Eswatini's FinTech Regulatory Sandbox, a groundbreaking initiative designed to support FinTech innovation. But what exactly is a regulatory sandbox? It's a controlled environment where FinTech companies can test new products and services under the guidance of regulators without the full weight of regulation, but with real-world impact. Delta Pay will take us inside their journey, highlighting how this innovative platform by the Central Bank of Eswatini has helped them develop, grow, and bring safe, cutting-edge financial solutions to market. We're joined by Nolwazi this afternoon. Very good afternoon. Thank you for coming through to Market View. So, how did Delta Pay first learn about Central Bank's regulatory sandbox, and what motivated you guys to apply?
Thank you. So just a little backstory. Our CEO, originally from Germany, had come to do his master's thesis in the country on digital currencies. So whilst in the country, he ended up being in charge, in contact with the Ministry of Finance, where he was advising them about the blockchain system and all digital identities in the country. And so whilst he was still in the country, that was during COVID-19. So he saw the gap in the market of local payments, whereby there were high card payments, and also there was just a huge use of USSD payments in the country, and also there was a lot of cash handling. So we were all dependent on cash at that time. So with that gap, he just thought of the apps that they used back then, back where he is from, which is in Germany. So he thought he could create an app-based platform, payment platform, which would be affordable for Emaswati, convenient and accessible to everyone who has a smartphone, which is how then he was led to know about the sandbox by the Central Bank.
Oh, interesting. So what's problem or what innovation was Delta Pay aiming to test with the sandbox?
So it was the onboarding process, a part of things, and also more than just the onboarding process of it, it was the access to assess the payments, turnaround time, obviously, and also to measure the user and merchant uptake in the country.
All right. So what were the key regulatory or technical challenges you encountered during the testing?
I would say it would be basically balancing the balance between the strict onboarding processes, which are the documents that are required for opening an account, and also the willingness for the merchants to actually bring them through. But you know, the central bank being able to contact the central bank and ask for help, they were able to come and help us and support us through that, and also help us to go through those hurdles.
Yeah. So has the sandbox environment helped you redefine or validate your business model or technology?
It has, actually, because with real-life testing, you're able to see where your app is going to take you, or rather your product is going to take you, and from there you're able to try and see if you can change your onboarding processes, for example, and so many other things that are included in the app. So it helps you to just reorganize yourself and also to realign your market strategy and the merchants that you need to go for at that time.
Yeah, I would assume that Central Bank does give support. You know, how would you describe the support and engagement from the bank during the sandbox period?
I'd say they're very supportive. Honestly, it has been outstanding, because anytime we have a problem, we have a question, or there's something that we don't really understand, we just go back to them and they're able to give us constructive answers, and also to just help and guide us in the way that we need to go whilst being compliant.
Okay. So were there any regulatory changes or insights gained that impacted your go-to-market or scaling strategy?
Yes, that would be, oh my goodness. Okay, so we changed our target market, and also we're able to try and incentivize our app usage. So going to the sandbox has helped us to incentivize our app usage, which has led us to making sure that our market strategy aligns with what we have learned in the sandbox and the activations that we were doing every now and then.
Okay, so what would you say were the lessons that you learned, compliance lessons through the sandbox that you wouldn't have otherwise discovered?
I'll just make an example of one thing. When we were doing the merchant onboarding, there were documents that are required, KYC documents that are required. So what we did then was to ask for tax clearance from the merchants, which for our rather the part that we're in, our fintech regulation doesn't require us to actually need the tax clearance because we're just level 1. We're not really level 5 or 3, or we're not part of the banks, you know.
Okay.
We're just like trying to make sure that there's financial inclusion. So we learned that we didn't really need that, and the central bank just clarified it to us that for the level that we're in, we don't really need the tax clearance, which has made business much more smoother for us, because when you're targeting, you know, the smaller merchants, they don't really have the tax clearance and all this other stuff.
Yeah, all right. Speaking of smoother business, let's talk about the benefits. Are they measurable benefits such as faster licensing, improved customer trust that came as a result of the Sandbox participation?
I'd say it has, we've benefited most on the boosting of credibility, because if you're regulated by the central bank, we know that you're legit, you know. It's easy for Eswatini to trust you because of the many scams that have happened in the country. So it's boosted us basically credibility, and also it has helped us you know, sped up the licensing, and also helped us to go out there and be credible to the people and gain trust, not only with the users, but also the merchants and our partners.
Okay, so how do you think sandboxes contribute to fintech innovation?
I'd say they enable us to financial inclusion and economic growth, because for us, we just came here to make sure that everyone is able to access payments on their smartphones. So they've helped us and aligned us with the markets that we're going for. So it has really benefited us a lot, and it has helped us to just realign strategically in everything that we do. They're always there to just realign us, you know, show us the way.
Sounds interesting and beneficial. So what lastly, what advice would you give to other fintech startups, particularly considering applying to a regulatory sandbox?
Now, I'd say they should go for it, mostly because there's so many things that you don't know when you're alone. But if you have someone backing you and someone showing you the way, it's easy for you to just have that confidence. And also it gives you a controlled room to do your testing in a real life environment. So many problems that we've encountered, we were able to come back and fix them faster because we have the central bank backing us. We have the central bank showing us the way that we should do things. So it's easier, and it's just amazing, you know. It's really been an amazing journey, considering that we started last year and today we're here, you know. So it's, the guidance is more than just, I don't know, outstanding.
Okay, all right. Thank you so much, Nolwazi. Well, there you have it. Delta Pays Nolwazi sharing their experience with the regulatory sandbox by the Central Bank of Eswatini. After the break, we're joined by Sanela Sbia for today's market analysis. Stay with us.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.za.
When you choose your adventures, you do so with an open heart and a desire for the unexpected. You embark on journeys to discover new worlds full of wonder. You choose a path to awaken your senses, a world to make you look up and realize just how inspiring this life can be. Arrive and awaken your heart. Explore life in ways only thought possible in your dreams. Discover just how far you go to expand your understanding of life's greatest mysteries. There's just one place on this planet with so much to offer. Now is the time for you to have the royal experience.
Welcome back. You're still tuned into Market View. We're getting into our final segment this afternoon. We are taking a look at today's market analysis with Sanele Sibiya. Sanele, good afternoon. Welcome back to Market View. So, Donald Trump always trending every day. He signed a proclamation yesterday, yes, banning citizens from 12 countries. Yes, how has the market reacted to that?
Thank you, Lungelele. So, as always, good afternoon. So what we're seeing again is, every day you wake up, there's always an executive order. There's always something. I think his signature has become one of the most popular signatures around. So what we're basically watching out for, markets were aware of those migration issues. They were part of the running campaign, and they were part of the major components of what determined who the next president of the US was going to be. So immigration was always going to be an issue. But right now, this comes at a time where there is a lot of volatility in markets, such that immigration issues at this point do not seem to affect markets that much. But what markets are moving to basically is the fundamentals of the U.S. economy. We are waiting to see, tomorrow we have the non-farm payroll data that's going to come out, and we are waiting to see how the jobs are, if there's new jobs that have been created in the U.S. economy, if the numbers are going down. And we are also looking out for inflation, and basically it's just that growth figure that really just hammers markets. But what we're seeing right now is markets somehow were rallying and, just moving, just regaining some of the grounds that they had lost during that what we call Liberation Day, that the infamous April 2 tariff storm. So, but what we're seeing right now is that the Nasdaq and the S&P 500 in the US have remained relatively flat, right? But what we saw just ticking a bit is that Dow Jones industrial average, just losing a few points there, purely again because markets are looking out at what is going to happen, the non-farm payroll data tomorrow that's coming out. And we do know there is quite a huge discussion around precious minerals, those minerals that are really quite critical for those tech stocks. So we saw that there was a deal there to ensure that there is a flow of those precious metals, those rare earth minerals. So that's why the Nasdaq somehow continued to stay on the green, but just by a margin, a small margin, as markets are waiting to see what's going to happen tomorrow. And still, what we had was, those are very beautiful earnings numbers that came out last week for quite a number of those firms that are listed in the Nasdaq. So that's why we're seeing those marginal 61-point gain, but we saw the Dow Jones Industrial Average actually losing those 91 points, because we're waiting to see what the non-farm payroll data is going to be tomorrow and what it means for the U.S. economy overall, the strength of the U.S. economy. But we do know that dollar continues to weaken day on day. But when we move across the pond into Europe, what's driving sentiment in Europe is we are all awaiting for the European Central Bank's monetary policy decision. So the world is waiting to see. It would seem we have moved from focusing on the Federal Reserve Bank's decisions to focusing now on the European Central Bank's decisions. So that's why we're waiting, and both the DAX is now on 24,000 because markets are quite confident that we are going to see Christine Lagarde cut those interest rates again as we move back to interest rate neutrality. So that's what markets are looking out for. So that's why we're seeing both France and that Germany and London as well on the positive. But also, let's not forget the impact of those security stocks on those defense stocks within Europe as Europe ramps up their spending. And now there's a NATO summit that's ongoing, and the US is not there. Probably they're going to join today. But what that sends is a message that says Europe is ready to take the lead. And we've seen the European defense minister say, Europe has always, America has led for so long. It's time now for Europe to come and take the lead. So now that signals that these countries' commitments towards improving their defense spending is actually going to come to fruition, and markets, those defense stocks, are actually pulling the charge in Europe. And also, if you look at the German manufacturing sector, it's continuing to perform relatively well amid those tariffs because of the strong supply chains and everything that has been built into that industry has become quite pivotal across the globe. And then when you cross over to Asia, you will see that in Japan we are seeing a bit of losses, but both in the mainland and in the semi-autonomous region of Hong Kong, there are those positive gains with the Hang Seng gaining some 252 points. But in Japan, the story there right now really lies around what they're going to do with their 30-year bond yield, their long-term bond issuance. Remember last week, the Bank of Japan had a meeting with investors, and investors really just raised a lot of caution around how Japan is going to handle and that long-term bond market. So that's what markets are really just looking towards, and we've seen that 30-year bond yield, just spiking, showing that there's a bit of uncertainty and a bit of misunderstanding in terms of how that monetary policy is actually going to play out in Japan. And remember, Japan is just coming out from a negative interest rate territory to a positive one. And then when we come into South Africa, we're seeing records being shattered. The Johannesburg Stock Exchange actually closed at 95,000 yesterday. Today, it's now trading at 96,000 in terms of all share volumes. This is a new record, and it's continuing to climb as the trade goes on. Now, that comes on the background of two things that are happening majorly. We saw yesterday the Parliament in South Africa actually passed Prime Minister Kondongwana's finance framework, that fiscal framework, showing that they are now agreeing to having a budget and how it's going to be executed. Okay. So markets are reacting positively to that. And also we saw last week the Federal Reserve, the Reserve Bank of South Africa actually cut interest rates. And again, now that pumped some liquidity into the markets, and markets are now responding to that. But there is also a lot of corporate action that we are seeing within the JSE. Quite a number of companies like Anglo Gold has actually been unbundled and, just coming up with quite a number of new divisions. We've seen Sanlam increasing their footprint across the globe. So there's quite a lot of optimism within the South African market. And also the metals are continuing to do well, and quite a number of those metal-based companies are also just performing very well right now. So coming into the Eswatini Stock Exchange, we have not seen any change. We haven't seen any action there. And then in terms of our commodities, both gold and crude oil and Brent crude actually are on the increase. But gold is not increasing by much. But the Trump factor there, the tariff factor, still stays in the markets, and that's what's pushing gold. And then in terms of Brent crude, we've seen Saudi Arabia saying they're going to cut their price for all those Asian sales. But, the overall output in the market remains relatively stable. And then the cuts in the interest rates that are expected, again, that's going to bolster demand, and Brent crude is starting to react to that. In terms of the Lilangeni dollar exchange rate, Lilangeni euro exchange rate, and the Lilangeni against the Japanese yen, we're seeing strength across all forex markets, with the Lilangeni dollar exchange rate now back to that 1780 type of mark. So there's still that strength that's being driven by the minerals and the performance of the GNU, and also the general weakness of the the US dollar. Thank you.
Thank you so much, Mr. Sbiya. Well, there you have it for today's episode. We'll see you again next week, Monday in Salagatle.